Hi there! You're invited to listen to an exclusive excerpt from the next episode that I'll be publishing on Sunday. My next guest is absolutely fascinating, and this is just a teaser of what you can expect from our discussion. Enjoy listening, and I'll see you on Sunday for the full episode.
Welcome to FinScale, a podcast created by Solène Niederkorn, shedding light on innovation in finance, banking, and insurance.
Data, the lifeblood of private equity warfare. Charlie Tafoya, CEO and co-founder of Chronograph.
There, I would say, the challenge was one more of data availability, right? Do you have a process in place to actually collect data in an efficient way, again, structure it and then report out to your LPs and, make use of otherwise for portfolio monitoring, again, in a way that maximizes your own understanding of your portfolio and opportunities, again, for value creation. So I draw that distinction between LPs and GPs to say that they're different sides of the coin. GPs, again, need to be more focused on basically the process of gathering and creating the data that they then report out. LPs, conversely, are more focused on receiving that information and consuming it in an efficient way.
There is still a long way to go to transform the PE industry, which still relies on Excel for many tasks. These manual processes are a golden opportunity for anyone looking to innovate in the industry and help the constellation of players in this ecosystem improve their efficiency and better serve their clients. I reached out to Chronograph because I am well aware of the work they've been doing for years to streamline data management, analytics, and reporting. This US-based solution offers a portfolio monitoring software that makes life easier for private equity investors across the globe. Charlie shares with us their story and how the initially LP-focused offering naturally expanded to GPs. We discuss the solution and the specific problems it addresses, one of the three essential pillars of the PE stack. Enjoy the show! Hello, everyone. Hi, Charlie.
Good morning. How are you doing?
Yeah, I'm fine. I'm thrilled to have you as guest on my podcast. And the listeners know, I'm a huge fan of private assets. So I'm very happy that we're again diving into the topic and to talk about the behind the scenes of Chronograph. Before we dive into the topic, can I ask you to introduce yourself to the listeners and explain a little bit your professional experience and your path to Chronograph?
Certainly. Well, thank you again for having me. But yeah, Charlie Tafoya, co-founder and CEO of Chronograph. Started my career as an investment banker, actually. So something that may be familiar to you. Did my few years as an analyst, and then subsequent to that, went into private equity with Pantheon, which is a London-based fund of funds. And at Pantheon, I did secondaries private equity. There, really got to see across the market, and at a stage when the secondaries market was really just beginning. So I think the first year I was at Pantheon, the total GMV of the market was something like 10 to 12 billion. Today that's over 100 billion, so it's just grown dramatically. But to the point, would say that it was a very interesting time coming out of the global financial crisis, and you saw a lot of fund restructurings, recapitalizations, and just raw secondary portfolio deals. And in short, it's a very interesting vantage on the business of private equity as a whole. As part of that experience, would say that a few things stood out. One is that, really there was more data than I ever expected there to be. That data had tremendous value, certainly in what we were doing, but just more broadly across the market. But felt very strongly that, unfortunately, there weren't very great technology tools to take advantage of that information. So that was really the context that provided the genesis for Chronograph itself.
Perfect. And when did you found your company?
In 2016, I actually left my job on a Friday, got married on a Saturday, and started hacking away on Monday. So it was a heck of a turnaround. And my father-in-law didn't even know that I had left my job on the altar, quite literally. So it was a lot of life changes all at once.
Good. Okay, so the listeners, there are amongst my listeners LPs and GPs, and some may have encountered challenges in their daily management, of course. But I don't have only LPs and GPs of private equity funds on the podcast, so I'm sure it's interesting for the others to shed light on the number of bottlenecks, particularly in terms of data management that they are facing on the day-to-day, that can have huge impact on investor relations innovation, but also regulatory compliance. So how would you say data fragmentation, as you said, and the management of that data can pose challenges for the LPs and the GPs to maintain that unified overview of investment portfolios, but not only?
Yeah, so I think, the first comment I would make is that private markets are in effect at the state of public markets, or at least where they were in about, call it 1986, which is to say, if you go all the way back to the 80s and think about the average experience of public company reporting, either you had to go down to a repository for filings and actually check out a filing, have literally a paper spreadsheet, do some computations, check the file back in, and then go, try to do your deal. Or if you're at one of the bigger banks, maybe you had this new platform called Bloomberg, or just a computer or computers in general. So all that's to say that, certainly we're beyond paper spreadsheets happily in private equity, but you're still dealing fundamentally with a lack of infrastructure, right, around how information is distributed and consumed. You're dealing with a lack of standardization around how that information is reported and, again, interpreted. And you're still seeing evolving norms around the sharing of information as a whole. Now, I think that, to be clear, that's totally appropriate, right? I don't think that public and private practices and public and private markets should ultimately converge. I mean, there's certainly some trends that will cause a degree of convergence. But just speaking as, the CEO of a private company and former private equity investor, I do think that there's a lot of value to the way in which private equity broadly operates. Having said that, I think, we are in 2024 now. There is a need for more digitalization as a whole. And as a result, I think we're really seeing a lot of opportunity, obviously, as Chronograph to help move the industry forward.
Now that you've heard an excerpt from the upcoming episode on Sunday, make sure you stay tuned and connected so you don't miss a beat.